Hello, I'm Peter Theunis, and together with Endava, we are diving into how companies are shaping the future of payments. Along with our network of experts, we'll discuss strategy, technology, and how companies are defining their direction of payment innovation. On this episode, we have Jim Tomaney of Renovite to discuss about new technology payment solutions. Hey Jim, how are you?
Good. How are you?
All okay with me. Can you tell me a bit about your company and the space that you're working in?
Sure. So Renovite Technologies, or Renovite, is a relatively new company in the payments infrastructure space. We have brought to market a new generation of payment solutions aimed at providing a modern solution to the age-old problem of how to process consumer payments in a timely and reliable fashion.
Okay, interesting. Now let's dive into the subject. What, to your idea, is today holding banks and processors back from adopting new payment methods?
Well, that's quite a good question, Peter. I think if you were to ask that of some of the fintechs in the payment space today, they would suggest that only they, the fintechs, can really provide innovation. But I don't believe that's true. I don't think that banks and processors lack innovative thinking. I think what holds them back more is the legacy infrastructure that they have in place today. That legacy infrastructure is the main barrier for them when it comes to implementing new payment methods. And the reason for that is their infrastructure is very cards focused, which is not surprising because it originates from the end of the 20th century. And at that time, of course, a plastic card was the only way to make a payment. So it's natural that the infrastructure focuses on that. To be honest, all of those infrastructure components evolved over time as the card payment method evolved. We went from PIN only or signature only. We went to EMV. We came to contactless. And lots of banks and processors enhanced and modified their platforms to cope with those changes. But that sort of patch up and catch up method that they've applied for so many years, it really only worked because the basic underlying payment method hadn't changed. The basic rules for processing a payment were the same for a card. But at the same time as they were doing that, they were making their infrastructure more and more complex and really more and more brittle, meaning that it's much more likely to break whenever they try and change it. And then more recently, there's been this explosion in new payment tokens and new payment methods over the last few years. And the approach of patch up and catch up no longer works because these new payment methods have very different workflows to cards. And then there's the cost, complexity, and risk associated with trying to force those new methods and new payment flows into the old cards-based environment. It's just no longer bearable. And that ultimately is what holds back processors and banks.
And you mean with the new payment methods, the ones that are based on open banking and not go over the traditional ISO 85, 83 lines for cards, but having more an ISO 20 or 22 rail and that kind of stuff?
Yeah, absolutely. Those sort of new payment rails are a part of it, Peter. But also even within the sort of consumer rails, if you like, new payment tokens and new payment methods are also having the same impact. So you've got new points of origination for payments, you've got new payment tokens, and then you've got completely new payment rails like open banking. And these things all combine together to create a whole sort of mesh of change that the aging infrastructures just can't cope with. So it's not a lack of willpower on the part of the banks or the processors or a lack of innovation. It's simply being tied down by that aging infrastructure.
Yeah, okay. Now, how do you think that the new technology solutions can replace legacy? And if they can replace, what's your opinion about that?
Well, obviously I work for a new technology company, but I'm going to commit the cardinal sin here of starting by saying new technology isn't the default right answer to every question. Some of my colleagues will be given a sharp intake of breath if they hear me say that, but we all know it's true. Technology alone doesn't solve these problems. But if you start with my observations previously about cost, complexity, and risk, you can see how new technology can help here. Those legacy infrastructures that we mentioned previously, they're 25 to 30 years old. And the reason that they're still there is they do some things very, very well. They're mostly reliable, they're very scalable, and they're highly available. And those are really key attributes of any payment system. Their real problem lies in their lack of extensibility and their cumbersome change life cycles. So the secret for any organization to be successful in payments really is to be able to replicate the benefits of those legacy solutions while addressing the shortcomings.
Yeah.
And to be fair to the providers of those solutions, they are a product of their time. Back in the 80s and 90s, they were required to build from the ground up to solve all of the architectural problems of high availability and mission critical applications. They had to build everything from middleware to comms managers to cache management and a load of other architectural components. They were all designed to exploit the underlying value of fault-tolerant platforms and operating systems. And those platforms were and still are proprietary and expensive. If you fast forward to 2022 now, the world's full of high availability mission critical systems, not just in payments. I'm pretty sure Netflix will tell you that their streaming platform is high availability and mission critical for them. So as a result of these new mission critical businesses in the market and the demand for solutions, there's a whole plethora of component solutions available that provide these architectural requirements that you need. And then you've got the cloud deployment model, which means that availability characteristics of proprietary platforms like IBM Z-Series and HP Nonstop, these can be delivered using commodity hardware. Yeah. So if you combine these two factors, it means you can engineer powerful payment solutions quickly and cost effectively. So if you exploit this new technology, but using the right level of thinking to maintain the key characteristics of payment solutions, you can create new extensible application architectures that solve the legacy problems while replicating the legacy benefits. And that's the benefit of new technology.
Yeah, I hear a lot in the benefits about costs. Are there any other that you see benefits for using these new technologies like cloud, like microservices in the payments world?
Yeah, I think so. I mean, microservice-based cloud-native applications are pretty good examples of how you can exploit the new technology options to deliver on the requirements of the market. If you step back from the legacy infrastructure and the legacy thinking that goes behind those systems, and you break the payments process into sort of a library of microservices, then you can start to assemble transactions from those libraries of services by orchestrating them in a particular sequence. And if you think about the legacy world with cards, there's only one basic sequence of how things get done, and that's the limitation of those old systems. Whereas in the modern world, with lots of different ways to pay and different scenarios for paying, what you want to be able to do is orchestrate a payment dependent upon the particular channel you're working in, or the particular payment token that's being used, or any other of a myriad of different criteria that might influence how you process a particular payment. However, the activities at a lower level that are required to process that payment are probably 80% the same each time, but you need to assemble them in a different sequence. With an orchestration engine and with a library of microservice functions, you can do that. You can assemble a payment scenario based upon any number of criteria. And when you do that, it means you can assemble a new payment transaction much more quickly than when you have to go and write software from scratch. And you can implement that new transaction quickly, and you can do so in a much less risky manner because you aren't changing any software. You're not changing the way your core system works to add a new transaction. You're just simply creating a new rule. So you can address the costs and complexity and risk issues that we talked about earlier. And then what you do is you combine that capability with the power of the cloud to handle sudden increases and decreases in workload. And that's important because we no longer can predict when transaction volumes are going to increase. 20 years ago, when I was an engineer, you used to draw straight lines showing transaction volume increase. That no longer is valid. Transaction volumes peak and trough at different times of the day in different parts of the world. So if you want to be able to handle that seamlessly, then you can adopt cloud technology for that. You can seamlessly distribute that workload across different regions and different data centers. So you get to achieve the same level of reliability, scalability, and availability that you got from your legacy proprietary architecture on a proprietary platform, but you do so at a fraction of the cost using commodity services from the cloud.
Okay, Jim, in the way that you tell it, it's almost like plug and play and no longer these long transform projects that we knew over the last 20 years. Now, do you see this, that now one or a few vendors will take this space and they will do everything, or will it still be partnership between multiple players in the ecosystem?
Absolutely partnership, Peter. In fact, the use of the phrase plug and play in our business is a sackable offence practically, because I think when people talk about these new technologies, they are very powerful, just as I've described them, but it's not trivial to use these. And I think anyone who underplays the complexity of how you solve payments problems using these new technologies is doing the industry a disservice. The whole ecosystem, payments ecosystem generally, is actually more complex than it was 20 years ago, right? When these current systems were built. If you think about it, acquirers now are accepting lots of new payment types and all of the old ones. None of them have disappeared. They're facing a whole myriad of new fraud risks, and there are new payment methods. They are trying to deliver embedded services where payments are really part of the consumer experience in some cases. The customer doesn't even expressly make a payment choice. It happens behind the scenes. This is a complex web of participants to make this work. And there's a lot of specialist suppliers who focus on particular parts of that value chain to deliver it, whether it's the consumer interaction, whether it's the consumer identification even. And really, to be successful in modern payments, a processor or a bank that's handling payments has to be able to combine all of these best-of-breed solutions. And again, some of these solutions will vary in different parts of the world because of regulation and because of local behavior. So the ability to succeed is the ability to combine specialists with their modern technology solutions to be integrated using common methods, shared APIs, etc. So if you're going to develop, test, and commission an end-to-end solution like that, you're going to require the same level of program management and integration skills that processors have value today. And I think that integrators that understand that payments domain and understand the working environments of banks and processors are going to continue to be fundamental to the next stage of the evolution of the payments infrastructure.
Okay, Jim, this is a very interesting topic. We could go on, I think, for the rest of the day or the rest of the weekend, but our time is up for today. So let me thank you a lot for joining this payment talks and participating in this conversation. And we are looking forward to see you in the future developments of Renovite in 2022 and how you will evolve in this space. Thank you for this and have a nice day.
Thanks, Peter. My pleasure.
Thanks for viewing this Endava videocast called Payment Talks. Today we had a very interesting talk with Jim Tomaney of Renovite, and in this last seconds I want to highlight some of the points made by Jim. First of all, the use of new technology in payments will allow banks and other players in the ecosystem to become more effective in delivering new payment methods to the market. And at the other hand, the integration of this new technology in legacy environments remains a complex journey. Now, with Endava, we are supporting our customers for many years in innovational projects around new payment technologies and new payment methods, but also we help our customers to transfer their legacy applications into new payments platforms. Thank you for listening to this first session, and we come soon back again with you with the next podcast. Thank you.